insuring before investing. I'm sure the guests I have with me are going to completely agree on that point as well. We are entering a world of uncertainties, and naturally that's the time when you all the more need to bring in a quantum of certainty, and insurance is the one product out there that's going to bring that to you. So let me now bring on board Kapil Mehta, co-founder and CEO at SecureNow.in, and Anup Rau, the MD and CEO at Future Generali India Insurance. Gentlemen, thank you so much for joining us today on the show. It's an absolute pleasure having you both with us. I hope you and your families are doing safe. Kapil, let me go across to you first. The word life insurance can be pretty complicated, but of course at the same time, for everybody, it's an absolute non-negotiable must. It's something that everyone should have. So what's that one basic product, Kapil, in the life insurance umbrella you believe everyone must have?
Well, that's a very easy question to ask because it hasn't changed for the past 100 years, and that's to buy a term insurance plan. So I think irrespective of COVID or not COVID, people should look at what their current income is, make the assessment that if they were to pass away prematurely, what would be the gap in financing for their families, and just buy that amount of term insurance. I think that's the best thing they can do.
Okay. Mr. Rao, when it comes to health insurance, it's even more complicated, in fact, if I could say that, because there are so many different kinds of products out there. And furthermore, now with the entire advent of COVID, you have disease specific, you have critical illness, you have your group mediclaim, you have family floaters, so on and so forth. So for an individual who may be having dependent parents, or for an individual who may be having children, most of these individuals could be the ones that, if they're still in their job, of course, they have their mediclaim, their group mediclaim. However, the job scene as well at this point of time is pretty precarious. Hence, what is that one? Do you think that they should buy a private health insurance product as well, along with what their company already covers them with?
So health insurance is an absolute necessity, and let's get the one fundamental right, that first you got to protect what you have, and what gives you the ability to earn and make money and enjoy a lifestyle is your ability to work. And that ability to work is contingent on you being in good health and you being able to afford any treatment, God forbid if something were to go wrong. Now, as far as health insurance is concerned, you could look at a family floater. You could look at, for instance, in case you want to economize, you could look at a floater which covers the younger people in the family and look at a separate product for your parents. That could end up being cheaper, for instance. You should look at a product which has lower sublimits. You should look at a product which is comprehensive. Go to a provider which has a comprehensive hospital network, especially a network of multi-speciality hospitals. I think there are a lot of factors which come into play. And so for health insurance, I would expect people to seek advice, because it's not a commodity, say, like other insurance products, which you have one size fits all. So there are a lot of factors which come into play over here. As far as the COVID situation is concerned, there are also standalone COVID products. But look, you see that every year, right? You have dengue, you have chikungunya, you have various illnesses during various seasons of the year. I would rather have a customer have a comprehensive health insurance policy which covers everything. Most companies have insurance policies which cover COVID as well. So I would urge customers to look at a comprehensive plan with the widest coverage possible.
All right. Okay. Kapil, now, the most common life insurance terms that a lot of our viewers have heard, and we in fact get a lot of queries as well, are firstly, of course, your plain vanilla term insurance, and then you have something called as endowment policies, whole term policies as well. What's the difference between the two? And also age cohorts. Which age cohort should opt for what kind of life insurance policy?
Well, broadly speaking, there are 2-3 different kinds of purposes with which you buy insurance, life insurance. One is that you buy it for financial protection in case the main earner dies early. That's term insurance. But a secondary and third need for buying insurance is that you may buy it for savings. You want to make sure you put away some money at a certain every year, so that at some stage it amounts into a big sum. You may decide to buy insurance as an investment because it's got certain tax benefits or it gives returns in the long term. These products which you buy for savings or for investment purposes are what broadly, very, very broadly get classified as endowments. Generally speaking, I think the absolute must is to buy term insurance. You must do that irrespective of COVID or not. After that, when you, as you grow older, I would say that if you buy an investment insurance, buy things that have a safe underlying base. So they're not necessarily equity oriented or equity backed life insurances, but more debt, more safer units. I think that choice you should make carefully. And what you should also do at that point in time is that make a comparison between life insurance and other investment opportunities that you have. Because you're buying for investment or for savings, and that would include life insurance, of course, but also mutual funds or government schemes and so on. So it must be a much more comprehensive analysis. And to Anup's point, even when you make a life insurance purchase like that, one must get good quality advice.
All right. Okay. Mr. Rao, for a health insurance, there are certain expenses that a policy covers, and then there are certain that they don't cover. But what do you think are those non-negotiable must cover components that that consumers should ensure that a health insurance policy should cover?
So I would stick to 2 points. One is pre and post hospitalization coverage, minimum 60 days pre and minimum 90 days post. I think that is mandatory. That's something that one should look for, preferably OPD as well, because there are a lot of procedures which are outpatient, which don't require hospitalization. So I think these are 2 things one should look for, and the other things that we mentioned. But these 2 are absolutely non-negotiable in my opinion.
Are there any, anything in the terms and conditions, anything in the fine print that maybe health insurance customers who may not be very, savvy with the jargons that are involved in insurance, but anything in the fine print that, customers should be aware of?
Look, I think you just need to look for exclusions. So what is excluded? What is the waiting period? What are the limits and sublimits? What are the reductions? And these things are printed. I think these are things which are mentioned in a policy document. People don't pay attention. But again, I would urge people to look for guidance, look for advice, go to a good advisor, find an intermediary who can actually handhold you through the process of buying this product. But it's all there, and I think people don't pay attention to it. Please, let's also understand that when you want to settle, you want to buy a product because of price, that will come at a particular cost. And the cost is normally in terms of the kind of deductions and the kind of exclusions which you might have to compromise on. So somebody has to handhold you through those comparisons. And for that, you need somebody to give you good advice.
It's always very tempting to just brush through, those papers and the fine print and not really pay much attention to it due to the paucity of time or simply because the lack of interest. But yeah, maybe sometimes, companies like Future Generali can handhold customers when they are going through the policy document to enable them as well to make a better decision. Okay, Kapil, let's talk about now sum assured. What should be the amount of life insurance you buy for yourself? I mean, this is very tricky, right? You have a company asking you that, listen, put a value on your life. How should you determine that, Kapil?
I think actually that's a beautiful question, because what tends to happen with all this pandemic is that the value of life tends to seem a little less, because we get so used to statistics, 2,000 dead, 3,000 dead, that we don't realize every person, the sort of not just the financial, but the emotional impact of every life. So I think it's absolutely important. Over the years, I've sort of suggested sum assured in 2-3 different ways. The most classically, theoretically right is to do what I had said earlier, which is you project your sort of expenses and your revenues, and the difference between the two should be what life insurance should fulfill. Practically, I have not seen very many people do that because it's a complex process and it's slightly unemotional. The other simple rule of thumb is to say that, look, whatever is your current income, you buy a certain multiple of that. And that could be 8 times or 10 times of your current income. What this multiple tells you is that were you to die today, from a financial perspective, it's as if you had an income for the next 10 years. And that is generally enough time for the family to find its feet. So that's an easier way to get to the sum assured. The third thing, which is actually the most effective in my experience, is when the person buying the life insurance links it to some benefit. And it could be that they want to educate their child in a certain college. It could be that they want to give a little gift to the spouse. If they were to pass away, they want the family to own a house on their own. And I think when they link the life insurance to a very specific single target, then that purchase tends to happen the fastest. So irrespective of which method you use, I would generally urge that you just get going. You don't have to get it 100% right. Just make that purchase, because you will have opportunities in the future to change it, increase your sum assured, modify your sum assured. But just get going.
All right. What about, Mr. Rao, what about for health insurance? Again, the question could be relatively a little similar, but of course different as well, because here it's the amount of bill that, you would have to foot, God forbid if there's any sort of health emergency that you have to face. But yeah, how does it go around, when you have to sort of nail down a sum assured when you're filling out the health insurance form?
So there are two factors here. One is the size of the group. In case of a large family, you would want to take a larger sum insured for obvious reasons, because you're covering more members. Smaller the family, the lesser. The second is obviously the age of the people. So in case people in the family are older, you would want to take the base policy at a higher sum insured rather than a lower sum insured. So these are the two factors which come in. What I would also like people to do is that, that while they take a base sum insured, even if the number is low, you should top it up. Top-ups come extremely cheap. So in case you're deductible of say 10 to 20 lakhs, you can go up to 1 crore for as little as 10 to 15,000 rupees additionally a year. And that is just in case that you have specific diseases which could be very intensive in terms of the kind of treatments required, say certain heart diseases, cancer, so on and so forth. Besides this, I would also urge people to look at a benefit plan which can be used as an income replacement plan. I think Kapil put it beautifully when he spoke about the fact that, term plan is used to replace the income over the next 5-10 years, and that's what the family needs to be secured against. But in the case of health, what happens is that a person is under prolonged treatment, the person loses his or her ability to earn income. So besides having health insurance to pay for insurance, you should also have a fixed benefit plan which replaces income in case the person is not able to work. And that should be to the extent to which you think you lose your salary in case, God forbid, you were to take treatment for, say, 6 months or a year, or have to be out of an active profession for a couple of years. So that's the way one should approach this.
I want to just follow up as well, since you brought up COVID again, on these insurance covers mandated by the IRDAI. They're called COVID Kavach, and the second name is not exactly coming to my mind right now, but basically they're standardized products that insurance companies will be offering. What's your view on those? I mean, again, it's like a disease specific, right? It's COVID specific. I'm assuming it, and hopefully it's going to be there for a short period of time. But is that something that maybe, given these uncertain times, given these tough times, customers could consider buying themselves for that added protection?
See, my view is very clear. I think that a customer should buy a comprehensive insurance plan, should not go for a disease-specific plan. I mean, look, you had SARS, you had MERS, you have COVID today. I mean, every year in Delhi, you have dengue and malaria, for instance. I mean, and in Bombay during monsoons, you have lepto and you have other diseases. So this keeps happening. I mean, you're better off being comprehensively covered, and mind you that in case you take a comprehensive insurance policy for the entire family, that work out far cheaper than taking individual products for individuals or for individual diseases. So economically, it makes more sense to be covered completely. It makes far more sense. Having said that, I also recognize that customers may not be in a position to pay a higher amount. So for them, a COVID standalone cover is a good option. Future Generali does have COVID insurance already before the regulators made it mandatory for others to offer it. I think it's a good move. Standardization also means there's lesser ambiguity in the marketplace and people know what exactly they're buying. I think it's very pro-customer, and I think the regulators done something very progressive here. But I would always vote for comprehensive insurance over standalone disease-specific products.
I did want to add something to what Anup said, if that's okay.
Health cover gets...
I want to add something to what Anup said, if that's okay.
Go ahead, Kapil.
In addition to the advantage, what Anup said, I think comprehensive plans should be the first choice, because as per the regulations, those are renewable lifelong, and there are sort of guarantees built into the law which make sure you will always have that insurance over the years. Some of these, the COVID plans, COVID Rakshak is the name I think you were searching for, are not lifelong renewable. So if you're getting into health insurance, I do agree it's best to get into a comprehensive plan that is going to last you throughout your life than just plan for this particular season or this particular pandemic.
Comprehensive plan gets a thumbs up from both Kapil Mehta as well as Anup Rau. Both believe that this will essentially cover everything, and it will do so in a more economic fashion, which by the way brings me to my next question, Kapil, because we were asked this question a lot of times, and many a times this is the reason why penetration as well of insurance is a little low, and that's the premium amount. So Kapil, a premium amount of course is dependent on a variety of factors. Some of them are controllable, some of them are rather in the hands of the customer. For example, when we speak on health insurance, the most obvious way to bring down your premium is to stay healthy. But also, instead of buying individual health covers, you take a comprehensive cover, right? So similarly for life insurance, any recommendations from you, any tips on how the premium cost could be cut down by the customer?
I think actually the premiums for term insurance are amongst the lowest in the world. So if there's a 35-year-old person who wants to buy a crore of sum assured, you can get that for about 10,000 rupees. I think that is extremely economical. And similarly, when you buy savings or protection oriented, you can pick the amount of insurance that you want. So I think premium is not so much of an issue in life insurance. But more important are the things around that you look at the insurer's claim settlement track record, look at their sort of quality of advice. I think those things matter more. Premium I see is actually rock bottom in life insurance for sure. Anup knows the health insurance side much better.
All right, understood. Okay, now Mr. Rao, I just wanted to also ask you a question that would be considered very relevant. It's raining, across India, and the rains have been quite torrential as well in various parts of the country, which then once again begets the question with respect to coverage for property damage, maybe to a certain extent car damage as well. So again, that basic cover that you believe everyone should buy for their property, for their vehicle?
Of course. You'll be surprised to note that, when it comes to vehicle insurance, a lot of time the car's parked and then the wall collapses and falls on the car, a tree falls on the car, the wiring gets damaged, the engine seizes. Monsoons can be a nightmare, especially in places like Bombay, where it rains for, a good 4 months of the year. So I think it's very important that you're covered and you have comprehensive. And God help you if the engine seizes. And I think every year I've seen this, that people have been forced to drive through 2 or 3 feet of water, and then and if they don't have comprehensive insurance, they have to spend a lot of money out of their pocket. As far as household insurance is concerned, again, it's extremely cheap. You can get cover for about 1 crore for a few thousand rupees. It's extremely cheap, and it covers fires and electrical short circuits and inundation and floods and so on and so forth. So I think it's cheap, and I think it gives you plenty of peace of mind. I must share a personal story. My own house caught fire. Unfortunately, it happened before I could renew my policy. I was between policies that time, and this happened in August last year. And I can only tell you that the premiums are incredibly low. So to get cover for about 50 lakhs, for example, you would pay just a few thousand rupees, about less than 5,000 rupees is the premium that it will cost you. And it covers, and it's comprehensive, it covers a lot of things. Vehicles, please don't take any chances, like I mentioned earlier. Because, statistically, we've seen a lot of claims go up during the monsoons, more than any other time of the year.
All right, and I'm sure if you'll go back and ask Mr. Rao, that non-renewal of the insurance did definitely cost him a lot when there was damage in his house. So folks, does not cost a lot. Just buy the property insurance cover. Luckily, India does have one of the cheapest rates, so it's really not going to cost you a lot compared to what you'll have to pay if there's any sort of damage inflicted on your property. All right, well, on that note, Kapil as well as Anup Rau, thank you so much for joining us today on The Money Show. I hope both of you stay safe amidst this COVID pandemic. And yes, all the very best. I'm sure there's going to be a flurry of individuals who already may be logging on to your websites to buy an insurance cover, given all of this uncertainty that we are facing. And yes, it's really assumed a significant amount of importance, not just from a health standpoint, but also sadly from the fact that we could perhaps be facing income losses or job losses as well. Well, with that, we'll wrap it up on the show. Thank you so much for watching. Tomorrow, stay tuned for day 3 of The Money Show's Personal Finance Masterclass.